Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 19, 2022. Hope you're all doing well. In today's segment, we'll take a look at most beaten down stocks and let's deep dive on Cisco systems. So with that, let's jump in and get started. Look, from a market perspective, we had a big down day today. After yesterday's big drop, today also we came down. Look, we got Dow Jones Industrial Average down 236. We got Nasdaq down 0.26%, and we got S&P 500 also down. So all these major indices are wondering where to go. At this time, they are squarely down, as you can see here, toward the finish line. So we got a big drop here in all the major indices. So we got to be a little bit careful here. Now let's take a look at the futures market and see what's going on. So let's jump into Thinkorswim platform. From a futures market perspective, look, we got a little bit higher uptick in the futures market. We got Dow Jones Industrial Average up 159 and S&P 500 also up, and same story with Nasdaq as well as Russell. After big drop here last couple of days, market is showing some strength. This can change anytime. Look, right now it's showing some small uptick in the futures market. It can change. And look, from a gold is dropping, as you can see here. It's a safe haven. It has gone higher, but in the futures market it is slightly down. I would still buy gold at these levels. It's a good hedging position. And look, crude oil is doing very well in a series of higher highs, as you can see here, higher lows. I think it's a good one to slowly buy at this time here, because it can go higher due to geopolitical tension. And finally, bonds are really selling off slightly, as you can see here. This can further come down. And look, from a treasury perspective, the interest rate perspective, interest rates are slightly going higher. This will cause trouble to stock market. All right, now let's now jump in and look at quick market update. Let's jump in here and go into Stock Rover. So as you look through here, Stock Rover, they got a nice dashboard in Stock Rover. So in the dashboard, it tells you what's most actives. So as you can see here, most active stock today in S&P 500 is AMD. Applied its advanced micro devices, one of my favorite stock. Look, it's slightly up today. It's a great stock to buy up here. Apple is having some trouble, as you can see here. Apple is a good stock, but right now it's having some trouble. So you got to be watching out on Apple. Maybe slowly buy, but it can further come down slightly. And we got Cisco Systems. Stock came down big time, as many of you know here. So at this time, it could be okay to start buying some Cisco here. Normally, they come down after the earnings many times, and then they make their way up slowly. It's a good swing trading type stock here. And then we got Nvidia, which is another my favorite stock here. That went slightly higher, as you can see here. And look, from a stock gainer perspective, as I look through here, we got few stocks which gained too much here. Look, Synopsys has done very well. It's one of my favorite stock here. It's done very well after the earnings announcement. And we got few more beaten down stocks doing well here. Look, Market Access, MKTX also did well. Generac, which is beaten down big time, finally started going higher, as you can see here. And we got solar player, Enphase Energy did very well. And we got Solar Edge also did very well. And Cadence Design did very well also. And then finally, from a loser perspective, look, we got big loser here. One of the big losers, Cisco. Cisco could be a good one to buy at these levels here. And we got few more, as you see here. We got HP and Hasbro. Look, Target is also big time down here. Clorox is also down, as you can see here. So at this level, one of my favorite plays to buy most beaten down solid stocks. I will look at Cisco Systems in a little more deep dive and go from there. And now let's quickly go back to FinViz here and see what's going on from a market perspective. FinViz gives a nice market update here. Nice chart. As you look through here in a one-day chart here, I can even make it a little bigger here, full screen. Look, it's a one-day chart here. Look, Apple is down big time today. One of the biggest stock, $2 trillion plus market cap. And then as you scan through here, we got Cisco right here down 13%. Ouch, that must be hurting here. And we got Avago or Broadcom down, and we got Google also down, as you can see here. So I would be picking up some of these names here, especially I would be picking up some Cisco as soon as tomorrow. This is a good one to buy at these levels here. It typically bounces back pretty nicely. And as you look through here from a year-to-date perspective, if I go here, if I choose here one year-to-date performance, look, year-to-date perspective or a one-year performance perspective, many of these stocks like Apple has done well in 1 year time frame, but Amazon.com, one of my favorite stock, is down big time. Facebook is down big time, and JP Morgan is down big time, as you can see here. So you got to be a little bit careful here, buy some solid stocks. If Apple comes down further, you could buy some Apple here and go from there. All right, now let's jump in here and look what's going on in today's market. From a market perspective, one of the good screening tool or a scanner is FinViz. FinViz is one of my favorite scanner because you can scan very quickly. Right now I put a scan here saying I need stocks which are more than 1 million shares traded and price more than $15. And look, I got a custom screener here or a custom view. If you have FinViz Elite Leader membership, you can get the custom tab here. You can put your own criteria, your own columns here. It will give a nice view. Right now I'm choosing the most beaten down place here. Look, we got Cisco Systems most beaten down today. Nice volume here. So if you want to see what's going on with Cisco, I could click on right here, or I could let me jump in right here to Cisco here, see what's going on. I could go here and go back right here and put Cisco right here. So I want to see what's going on with Cisco. Look, Cisco, huge big drop. Look here, we got Cisco dropping down big time. Look at this tumble, big tumble. It's down 6% or $6.64, all the way from $50 to $41. That must be hurting. As you look through here, as I go down here from an RSI perspective, a relative strength index perspective, look, Cisco's RSI down big time. So it's 26. It's one of the lowest level, as you can see here, in a very, very, very long time. And as you scan through with Cisco here, I think it's from a earnings per share perspective, company is doing very well here. Slightly down EPS, as you can see here, trending down, but solid company is making money. From a sales perspective, solid $49 billion sales here on an annual basis. Pretty consistent. There is some ups and downs, as you can see here, but pretty consistent. Shares outstanding perspective, Cisco is not diluting the share count here. They're reducing the share count, which is very good. As you scan through here, look, we got Wells Fargo here. Wells Fargo reiterated here. They are saying $65 to $52. That's kind of a downgrade, as you can think of here. Because I think it's even up here at $52. It's much higher than the current stock price, which is really $41. So that's why it's a good one to buy at these levels here. As you look through the analysts here, most of them have got ratings higher than the current ratings, as you can see here. Look, all these ratings are initiated May 19th, which is today. As you scan through here, most of these, almost all of these ratings are above the current stock price. That's a good, good news here. And as you scan through here, news perspective, look, Cisco logs the worst day in more than a decade as China shutdown blamed for poor outlook. So it's really, China is impacting the stock here. So at this time, I would, try to buy some stock here. As you deep dive into the stock here, one of my favorite ways to deep dive into the stock is to look at stockrover.com. So as we look through here in Stockrover, I could go to the dashboard, as you see here, and put Cisco here. And Stockrover is pretty good in bringing up a nice visual. I love visual in Stockrover. I could collapse this and look through Cisco and see what's going on. Look, from a Cisco perspective, Look, nice stock chart here. From a stock chart, as you scan through here, look, stock is doing pretty good here, but there is a huge drop, as you can see here, right here, big drop here. And as you see here, we got market cap is pretty solid here. Look, 173 $173 billion market cap. That's a good market cap. And look, from a stock perspective, we got nice chart here. This kind of tells you how is the stock doing here. Look, stock is doing pretty good here, and their value score, growth score, quality score, all doing very well. And one of my favorite indicators is really this Piotrowski F score here. Look, Piotrowski F score is 7. That tells you it's pretty solid here. The accounts are very good, so that's why I like this. From an Altman Z score perspective, which is the standard for industry financial strength, that's pretty solid here. That's why I like Cisco at these levels here. As you scan through from a benchmark perspective, stock is doing pretty nicely here. Look, against the industry here. From a sentiment perspective, Cisco gets a high sentiment score here, which is 95. And stock is doing very well from a valuation perspective, gets a nice high valuation score, and profitability is great. Look, quality score is 97 here. So overall, Cisco is doing very well here. That's why I love this company. As you look through what analysts are saying about this company here, you can quickly go here. It tells you analysts are saying, buy Cisco, and current rating, buy rating is 8. That's pretty good here. This might change after today's stock drop here, but generally analysts are saying buy this company. And as you scan through here, I would also typically look at the ratings here. Stockrover also gives you nice ratings. Look, overall ratings of Cisco is 83. That tells you the company is pretty rock solid here. And it says it has got membership in multiple of these indices, as you can see here. It's it's member in Dow Jones, S&P 500, S&P 100, and so on and so forth. I think it's a good one. We could take a look at this company here. As you scan through from an efficiency perspective, look, company is pretty efficiently running. Let's let it come through here. And look, from an operating margin perspective, solid operating margin. It's a nice operating margin here. Net margin is also pretty good, pretty stable here. And as you scan through, look at the financial strength here. From a financial strength perspective, Cisco is doing pretty good. Look, from a debt to equity perspective, they're bringing down their debt level, which is very good here. That's why it's a good play here. So with that, I think Cisco is a good play. I would recommend buying Cisco at these levels. And finally, let's look at Cisco and see what Seeking Alpha tells about Cisco. Look, Cisco had the earnings today, and look, they beat on the EPS or earnings per share by 1 penny, but they missed on the revenue by $503 million. That's a big miss, as you can see here. And if we scan through the what commentary we have, from a commentary perspective, Cisco takes a dive on weak Q3 results and guidance, and let's see more trouble ahead. That's why it's good to slowly buy Cisco here. Can it come down a little more? It can, but I think there is a good upside. I think it's good to buy. And they also give some softer outlook here. That's one of the reasons Cisco stock came down here. But look, as you look through the history here, historically Cisco had done well. It's a very predictable company. They'd been beating on the earnings per share all along, as you can see here. And revenue perspective, they missed twice, but I think it's a solid stock, a good one to buy. So now, as you scan through here, we got a few more going on here. Let's go back to our scanner. Look, we got Exelixis, one of my favorite company here. This is pretty rocky type company. Look, it's down big time, 10% down here. At these levels, I would be looking at Exelixis also. I would be slowly buying some Exelixis. Look, from a stock perspective, Exelixis came down, as you see here. Big drop here. So I would take advantage here and buy some Exelixis at these levels. And as you scan through here, what's going on? Look, from a news perspective, Exelixis stock has been sliding, but fundamental look decent. Earnings beat, but revenue miss. That's what's going on here. That's why this stock came down. And look, from a as you scan through here, they've been doing pretty well. It's a profitable company. They got positive earnings per share. The sales is doing very well, and shares outstanding is pretty solid here. So that's why it's one of the good stock you could buy even up here. As you look through stock over here, look what's going on here. Let's go back to the dashboard and look at Exelixis. All right. So look, from a stock perspective, Exelixis, it gets a nice, stock is down big time, as you can see here. But as you scan through here, look, it's got nice value score, great growth score, and great quality score. Overall, it's doing very well. Look at the Piotrowski F score that tells you it's 7 is very high. That tells you books are solid. It's constantly improving. And Altman Z score tells you they got enough money. So that's why it's a good one to buy at these levels. And as you scan through here, let's look at the report here and see what ratings we have. All right. So as you look through here from a rating perspective, Exelixis gets a 99, which is one of the highest rating overall. So that's why it's a good one here. And look, from a debt to equity perspective, they are bringing down the debt big time. That's always good. As you look through the efficiency here, from an efficiency perspective, companies really turning positive in the operating margin. They're also turning positive in net margin slowly. That's why companies' financials are improving. It's a margin is improving. From a financial perspective, I think we already looked at this. They're reducing the debt load, which is always good. All right, that's about this company here, Exelixis. I'll be initiating a small position here. Then as you look through here, let's go back here quickly. All right, that's about the most stocks which are fallen down the most here. You could also look at what stocks have fallen down the most in the week's time here. Look, we got few stocks big time down here. I love stocks like Target and Walmart. These stocks have come down so much here. You could take advantage and buy some of these stocks here. It's a great one to buy at these levels here. All right, so with that, we'll do a quick wrap here. So thank you very much. Happy investing and trading. Please subscribe.